Picture this: Lancaster County, Pennsylvania, 1982. While Wall Street traders were panic selling gold at $300 an ounce during the worst recession in decades, the Amish were quietly accumulating something else entirely, something they'd been hoarding for over 200 years. Today, that something has created an estimated $10 billion in wealth across Amish communities. It's not crypto, not stocks, not precious metals. It's so obvious Wall Street completely missed it. And here's the disturbing part: they're still missing it. This is the story of the most undervalued asset in American history, and why you've been looking in all the wrong places. Let's go back. 1730s. The first Amish families arrive in colonial Pennsylvania. They're fleeing religious persecution in Europe. They have nothing but their faith, their families, and one radical idea: land. Not just any land, fertile, productive, multi-generational farmland. Now here's where it gets interesting. In 1980, gold hit $850 an ounce. Adjusted for inflation, that's about $3,100 today. Sounds impressive, right? An acre of prime Pennsylvania farmland in 1980 cost roughly $2,000. Today, that same acre sells for $15,000 to $25,000. Do the math. That's a 750% to 1,150% return. Gold over the same period, about 265%. But the Amish weren't speculating. They were doing something far more sophisticated, something that would make modern portfolio managers weep. They were building a wealth engine that produces income, appreciates in value, feeds their families, and gets passed down tax-advantaged for generations. So how does this actually work? Think of gold as a pet rock. Beautiful, shiny, but it just sits there. You buy it, you store it, you hope someone pays you more for it later. That's it. No income, no utility, just speculation. Now think of farmland as a living, breathing wealth machine with 4 distinct engines. Engine 1, cash flow. Every single year, that land produces crops: corn, wheat, soybeans, hay. The Amish aren't just holding an asset, they're running a profitable business on top of it. Average annual return from farming operations? 3 to 5% on top of appreciation. Gold's annual yield? 0. Engine 2, appreciation. Land doesn't just hold value, it compounds. Why? Simple economics. They're not making any more of it, especially not the good stuff. Prime agricultural land near water sources with rich topsoil built up over centuries. Engine 3, leverage without debt. Here's where the Amish got really clever. In mainstream finance, if you want leverage, you borrow money. You take on risk, you pay interest. The Amish found a different path: community labor. Multi-generational families living and working the same land. 5 families working 500 acres generate more wealth than 1 family working 100 acres, and they're not paying a bank a dime in interest. They're leveraging human capital instead of financial capital. Engine 4, tax efficiency. When you sell gold, you pay capital gains. When you die holding gold, your estate pays taxes. But farmland, especially when passed down through family trusts and kept in agricultural use, agricultural exemptions, estate tax benefits, stepped-up basis advantages. The Amish weren't just investors, they were generational wealth architects. But here's where the story takes a dark turn. 1990s, the housing boom begins. Developers start circling Amish country like vultures. Prime agricultural land near Philadelphia, Baltimore, Pittsburgh. Suddenly, it's not worth $50,000 an acre as farmland. It's worth $50,000 an acre as housing developments. Some Amish families sold, took the money. The pressure was enormous. Between 1990 and 2020, Pennsylvania lost over 750,000 acres of farmland. New York lost 1.3 million acres. Nationwide, we're losing 2 acres of farmland every single minute. But the Amish who held on, they made a discovery that changed everything. As farmland disappeared, food security became a crisis. Local food movements exploded. Organic farming went mainstream. And suddenly, that old-fashioned farmland wasn't just valuable, it was essential. The Amish weren't just landowners anymore. They were feeding entire regions. Lancaster County alone generates $800 million in agricultural revenue annually. Then came the second wave, climate change. Water scarcity, soil degradation, supply chain collapses. And who had the most resilient food systems, the most sustainable agricultural practices? The same people everyone had dismissed as backward, the Amish. So what happened next? Wall Street finally noticed. Agricultural REITs exploded. Agricultural ETFs launched. Billionaires like Bill Gates started buying up farmland by the tens of thousands of acres. Gates now owns more farmland than anyone in America, 269,000 acres. Why? Because he read the same writing on the wall the Amish saw 300 years ago. Global population heading to 10 billion. Climate change reducing arable land, water becoming scarce. Productive farmland isn't just an investment, it's survival. But here's the brutal irony. The Amish $10 billion secret was never a secret. It was hiding in plain sight. While modern investors rode the roller coaster of boom and bust, the Amish simply farmed. 2008 financial crisis? Farmland held steady. 2020 pandemic? Food demand exploded. 2022 inflation surge? Farmland appreciated 12% in a single year. Over the last 50 years, farmland has delivered remarkably consistent returns with low volatility. It's negatively correlated with stocks. It's a natural inflation hedge, and unlike gold, it produces income. Today, you don't need to be Amish to access this asset class. Farmland REITs, agricultural ETFs, fractional farmland platforms like Farm Together and Acre Trader. The secret is out. So what's the real lesson here? It's not that farmland is magic. It's not that the Amish had secret knowledge. It's that they understood something we've forgotten. Real wealth isn't about speculation. It's about productivity. Real security isn't about hoarding. It's about creating value that feeds, shelters, and sustains. Gold is inert. It waits. Land is alive. It works. The Amish weren't investing for the next quarter. They were building for the next century. While Wall Street chased yields and volatility, they played a completely different game. And they won. So here's my question for you. What other old-fashioned wisdom have we dismissed as primitive that's actually sophisticated wealth strategy in disguise? Drop your thoughts in the comments. And if this changed how you think about investing, hit that like button. Because sometimes the most advanced move is the one that's been working for 300 years.